Hello students, welcome to my channel Hans Commerce Tutorial for the lectures on commerce, accounts, finance and management. My suggestion to you, before watching the video, please go to the description below my video. You'll find a link there. Take a printout of the problems given in the link and keep it ready before watching the video so that you can be able to understand the problem, the solution and the explanation to get the maximum benefit from the lectures. Thank you. So we have completed 6 problems on internal reconstruction. So in the last 6 problems we have seen how to reduce the capital and how to write off the fictitious assets and intangible assets and write down the other remaining assets by using the capital of the company. So internal reconstruction meaning we have seen on asset side we write off the fictitious assets. We write off the fictitious assets, unnecessary assets which does not have any realizable value. At the same time we reduce the capital. Those are the problems we have done. Now 7th problem I am reading out. Hope everybody got the printout of the problems from the link which I have given. 7th problem. The following is the balance sheet of Nav Bharat Company Limited. Authorized capital, that is 10,000 preference shares of rupees 100 each, 10 lakh. 10,000 ordinary shares of rupees 100 each, 10 lakh. So total authorized capital 20 lakh. Then subscribed capital was 7,500 shares of rupees 100 each, 7,50,000. And 5,000 ordinary shares of rupees 100 each, 5 lakh. These are the subscribed capital. Sundry creditors, bank overdraft, 2 outside liabilities are given. Then patents, intangible asset. Premises, plant and machinery, these are the tangible fixed assets. Debtors, stock, share discount. This share discount, preliminary expenses, deficiency account. These are fictitious asset. This should be eliminated completely. And cash on hand 500. The following scheme of reconstruction was adopted. The preference shares to be reduced to an equal number of fully paid shares of rupees 50 each. So earlier, presently, the face value of the preference share is 100 rupees. Now there is a proposal to reduce it to 50 rupees. Number of shares remaining same. The face value is going to be reduced from 100 rupees to 50 rupees. And the ordinary shares to be reduced to an equal number of shares of 25 each. So presently the face value of ordinary shares is 100. Now we are reducing it to 25. So we have to cancel the old preference share and issue the new preference share. Old preference share was 100 rupees, new preference share was 50 rupees. Similarly, equity share. We have to cancel the old equity shares 100 rupees. Now new equity shares of 25 rupees will be issued. The balance will be transferred to a new account called reconstruction account. The amount available will be used as follows. To write off 30,800 on premises, on tangible fixed asset premises, we have reduced 30,800 and 15,000 on stock. To reduce plant and machinery by rupees 8,440 and to value debtors at 61,200. To eliminate fictitious assets and reduce patents to 5 lakh. Presently patents value is 8,50,000 in the balance sheet. We have to reduce and bring it to 5 lakh. So 3,50,000 we have to write off patents. Then redraft the balance sheet giving effect to the scheme. So after making all these changes, we have to make an amended balance sheet, right? After capital reduction. So first we'll pass the entries, see carefully. Preference share capital old 100 rupees, 7,50,000. Subscribed capital given in the balance sheet. In the balance sheet, subscribed preference capital 7,50,000 and cancelling it. Debit karne se cancel. Now 2, preference share capital 50 rupees. Equal number. पहले 7,500 थे, अभी भी 7,500 है. 100 रुपीस जाकर 50 रुपीस हो गया. नया प्रेफरेंस शेयर 50 रुपीस. तो 7,500 into 50, 3,75,000. So remaining 7,50,000 minus 3,75,000, remaining balance 3,75,000, that is transferred to reconstruction account. Explanation, narration thing, being the old preference share capital cancelled and new preference shares issued as per the reconstruction scheme. Now equity, same way, equity share capital. Old equity share capital was 5,000. 5,000 equity shares of rupees 100 each, 5 lakh. This was the existing equity share capital. Now we have to cancel it. Debit kar diya. New equity share face value will be 25 rupees. Number of shares remaining same, 5,000. 5,000 into 25. 1,25,000 is the new share capital, equity share capital. So 5 lakh minus 1,25,000, 3,75,000 balance that is transferred to reconstruction account. Being the equity share, old equity share capital cancelled and new equity shares issued as per the reconstruction scheme. So these two entries, first preference, second equity. Now reconstruction account was credited by 3,75,000. Here reconstruction account is credited by 3,75,000. Totally 7,50,000 rupees we are having in reconstruction account. By using this 7,50,000, we are going to write off assets, write down assets. Now third entry, reconstruction account that are 7,50,000. ये दोनों को add कर लो, 7,50,000. Now we credit all the assets which are to be written off or written down. To premises 30,800. It is specifically given in the first point. The premises should be written down by 30,800. Stock should be written down by 15,000 given in the problem. Plant and machinery should be written down by 8,440 given in the problem. The debtors. Balance sheet debtors value is 76,500. In adjustment it is given that the debtors has to be brought down to 61,200. And a balance sheet में जो 76,500 है उससे नीचे उतार कर 61,200 पर लेकर आना है. तो how much amount we have to decrease? Subtract कर दो. 76,500 minus 61,200 we have to decrease by 15,300. So debtors should be decreased by 15,300. Share discount. This is fictitious asset. Then preliminary expenses fully written off. Deficiency account fully written off. Patents. Patents 8,50,000 given in the balance sheet, and adjustment it is given that it has to be brought down to 5 lakh. So 3,50,000 we have to write off. Now from 7,50,000 if you deduct all these amounts, still we are having a balance of 1,85,460. That balance we are going to transfer it to capital reserve account. Narration देंगे. Being the fictitious assets written off and other assets written down as per the reconstruction scheme, and the balance is transferred to capital reserve account. So we have implemented the scheme. Now what will be the effect on the balance sheet? Now you see. First we'll prepare a blank balance sheet, then we'll take the amounts. Equity and liabilities, shareholders fund, share capital number 1, reserves and surplus number 2. Then current liability, trade payable 3, short term loan 4. Total. Assets, non-current assets, fixed assets, tangible, intangible, current asset, inventory, trade receivable, cash and cash equivalent, total. This is the blank balance sheet we have prepared. Now we'll take the amounts one by one. First, note number 1, share capital. 7,500. पहले भी 7,500 preference shares थे, अभी भी 7,500 preference share है. सिर्फ फेस वैल्यू कम हो गया. पहले 100 रुपीस पर शेयर था, अब फेस वैल्यू 50 रुपीस. तो 7,500 into 50, 3,75,000 is the preference share capital. 5,000 equity shares, ordinary shares. पहले जितने थे अभी भी उतने ही है. पहले 100 रुपीस पर शेयर था, 25 रुपीस हो गया. तो 5,000 into 25, 1,25,000. तो preference share capital 375, ordinary share capital 125. Add up 5 lakh. So 5 lakh rupees is the share capital, and this should be taken in the balance sheet. Now reserves and surplus. Earlier we don't have any reserves, but now capital reserve is created. By using this reconstruction, we got a capital reserve of 1,85,460. So under reserves and surplus, we'll take capital reserve 1,85,460. Take it here. Trade payable are the creditors. There is no change in creditors. You can see here creditors are not at all changed. So whatever is given in the balance sheet, same creditors I have taken, 30,000. Then short-term loan, bank overdraft. Bank overdraft is given in the balance sheet. We have not made any change in bank overdraft. So same bank overdraft I have taken here, 20,000. The liability side total we got 35,460. Now assets. Assets, tangible assets, fifth. Number 5, tangible assets. In this we'll take premises and plant and machinery. Premises balance sheet value before capital reduction was 1,30,800. Now how much premises we have written off, you can see here. 30,800 premises was written off. So minus कर देंगे. 1 lakh rupees remaining. And plant and machinery, before capital reduction scheme, 42,200 was there. From 42,200, we have written off 8,440 minus 8,440, 33,760. Add up 1,33,760 is the tangible fixed asset. Intangible fixed assets, patents were there. So before capital reduction, patents were 8,50,000. Out of 8,50,000, how much was written off here? 3,50,000. So 8,50,000 minus 3,50,000, 5 lakh rupees. So intangible asset, patents are 5 lakh. Now I have taken 5 lakh. Inventories, no change at all. We have not made, yes, inventories, there is a change. Stock, the stock was there. You can see in the problem, the stock in trade was 55,000 in the balance sheet. Before capital reduction, 55,000. How much stock was written? 15,000. So 55,000 minus 15,000. You have to write. I don't have space. That's why I have not written. You have to write down here 7th note. I have stopped at 6th note. You have to continue. 7th note. Inventory, stock. 55,000 minus 15,000. You'll get 40,000. Similarly, trade receivable. Trade receivable are the debtors. The debtors given in the balance sheet was 76,500. 76,500. Out of 76,500, we have written off here 15,300. 15,300 we have written off. The remaining balance is 61,200. Cash balance, there is no change. पहले balance sheet में था, अभी भी वही 500 rupees. Now your balance sheet is 7,35,460. That's all. So this is the complete explanation of this problem number 7. How we have implemented the scheme of capital reduction. How we have passed the entries and how the balance sheet is amended. Now next problem is problem number 8. The summarized balance sheet of X company as on 31st March 1999 was as follows. 5,000 equity shares of 100 each, 5 lakh. 6% debentures, 2 lakh. Profit prior to incorporation. Profit prior to incorporation is given on the liability side. It's a capital profit. And this can be used for writing of the asset along with reconstruction account. So profit prior to incorporation is a capital profit. So we can use it for writing of the asset. Creditors, then bank overdraft. Now come to asset side. Goodwill, land and building, plant and machinery. Then patents, bank, debtors, motor cars, stock in trade, profit and loss account, preliminary expenses. The last two, profit and loss account and preliminary expenses, are fictitious asset, whereas goodwill and patents are intangible asset. The business has passed through a depression and the worst seems to have been over. The following scheme of reconstruction is adopted with the consent of all. Each share was to be reduced to 1/5 of its value. Each equity share will be reduced to 1/5 of its present value. The present value of equity share was 100 rupees. 100 rupees. So 1/5 of 100 rupees is 20 rupees. So we have to cancel the old equity share of 100 rupees and issue the new equity share of 20 rupees. Each shareholder was to subscribe for half the number of shares already held by him at its new value and pay immediately in cash for the new shares taken up by them to help the company with working capital. So each shareholder has to subscribe for half of the present shares. So presently how many shares are there? 5,000 shares are there. Presently total number of shares are 5,000. So every shareholder has to subscribe for half of that amount. जितने भी हर shareholder के पास है उसके आधे shares अभी खरीदना हो, subscribe करना at its new value. New value is 20 rupees. So 2,500 into 20. You'll get 50,000 rupees. That 50,000 rupees the company will get by issuing new shares. Then all fictitious items including goodwill and patents were to be eliminated. So goodwill as well as patents, intangible assets and fictitious assets must be written off. A provision of 5% on debtors in respect of doubtful debts was to be created. Okay. Motor car was to be reduced to half of its value. Plant and machinery was to be written down by the balance amount available. Reconstruction account के जो balance बचा हुआ रहेगा, that amount we can use it for reducing plant and machinery value. You are asked to give the journal entries necessary to record the above and show the resulting balance sheet. Now, see carefully. Journal entries. The first journal entry, equity share capital account data 5 lakh. Presently 5,000 shares are there. The face value of each share was 100. Now we are writing off. We are cancelling the old share capital. And we are issuing the new share capital for 1/5 of its present value. तो present value 100 rupees का है, तो 100 का 1/5 जो है 20 rupees, तो new share equity share face value is 20 rupees. तो 5,000 into 20, 1 lakh. So 5 lakh minus 1 lakh, 4 lakh rupees will be transferred to reconstruction. Being the old equity share capital cancelled, new equity shares issued as per reconstruction scheme. We don't have any preference share capital. Secondly, every shareholder has to subscribe half of their present holding at its new value 20 rupees. So presently total number of shares are 5,000, half of 5,000, 2,500. So totally 2,500 shares the shareholders must purchase at 20 rupees. So entry will be bank account data to equity share capital. So bank account data to equity share capital 2,500 shares into 20, 50,000 being the new shares issued. Reconstruction account data. How much is the amount credited to reconstruction? 4 lakh. So reconstruction account data 4 lakh. Profit prior to incorporation account 10,000. There's a capital profit that is also be transferred. So profit prior to incorporation 10,000. To goodwill 90,000. We are writing off goodwill. Patents 30,000. We are writing off. Preliminary expenses 40,000. P&L account 2 lakh. ये दोनों intangible assets है और ये दोनों fictitious. We have written off all. It is asking you to make a provision of 5% on debtors. Debtors are 90,000. 5% 4,500. Motor car to its half of the value. In balance sheet, motor car value is given 10,000. Half of 10,000, 5,000 we are writing. And the balance remaining that can be used for writing off the value of plant and machinery given in the problem. तो अब ये 4,10,000 में से ये पूरे माइनस कर दिए तो बचा अमाउंट 40,500. So we will reduce plant and machinery by rupees 40,500. Being the intangible assets written off and fictitious assets written off and other assets were written down as per the reconstruction scheme. Now, balance sheet. Equity share capital, reserves and surplus, non-current liability, long-term borrowings, trade payable, short-term loans, fixed assets, tangible, intangible, inventories, trade receivable. Exactly same balance sheet. Format will not change. Only the amounts, notes will change. First note, share capital. Up share capital, here I have shown you notes, share capital. 7,500 equity share of 20 each fully paid 1,50,000. Earlier, before capital reduction, 5,000 shares are there. At the time of capital reduction, 2,500 more shares are issued. So 5,000 plus 2,500, 7,500 shares. Each share 20 rupees, 1,50,000. Reserves and surplus. We don't have any reserves and surplus. Dash. Long-term borrowings. Long-term borrowings are debentures, 6% debentures. So in the balance sheet, it is given 6% debentures, 2 lakh rupees. Same 2 lakh rupees I have taken, no change at all. Then trade payable creditors, no change. Short-term loans and advances, bank overdraft, here I have shown, no change. So same amount, 5,40,000 is the total of the liabilities. Now asset side, tangible assets, 3,04,500. How we got 3,04,500? Here I have shown. Here it is. 3,04,500. Land and building, 1 lakh. Plant and machinery, 2,40,000 was there. And here we have written off by 40,500. So minus 40,500, 1,99,500 is the plant and machinery. Motor car value, earlier it was 10,000. 5,000 rupees we have written off. So remaining 5,000. Total 3,04,500. Intangible assets were there. We have written off. Goodwill, patents था पहले उसको write off कर दिए, निकाल दिए, नहीं है. Inventories, stock. We have not changed the stock value. Stock value will remain same, 95,000. Trade receivable. Trade receivable was given, debtors were given 90,000, and in adjustment we have created 5% provision for doubtful debts. So 90,000 ka 5%, 4,500, here we have taken, minus kar do 85,500. Last one, cash and cash equivalent. Ab cash and cash equivalent mein cash balance, bank balance, it is given in the problem 5,000. So before capital reduction, 5,000 rupees was the cash balance. Now, we have passed one entry, bank account data to equity share capital 50,000. 50,000 रुपये और आगे equity shares के. तो 5,000 plus 50,000, 55,000 rupees is the cash balance that we have taken. Cash and cash. total 5,40,000. This is the complete explanation of problem number 8. Now we'll start problem number 9. See the 9th problem. The balance sheet of AP Industries Limited as on 31st December 96 was as follows. Liability side, share capital 2,000, preference share of 100 each 2 lakh, 4,000 equity share of rupees 100 each 4 lakh, 6% debentures 1 lakh, bank overdraft 50,000, creditors 1 lakh, 8 lakh 50,000 total. Asset side we have goodwill, freehold property, plant and machinery, stock, debtors, P&L account. So this is the balance sheet given. In this P&L account is a fictitious asset that should be written off, and goodwill is a intangible asset. The company got the following scheme of capital reduction approved by the court. The preference shares to be reduced to 75 rupees per share fully paid up. So presently the face value of each share was 100. So we have to cancel that 100 rupees and issue new preference share of 75 each. And equity share to 37.5. Presently the face value of each equity share is 100 rupees. We have to reduce it to 37.5. The debenture holders took over the stock and book debts in full satisfaction of their claim. That means debenture holders' claim is also settled. The debentures are closed and we are handing over the stock and book debts. The goodwill account is to be eliminated. Intangible asset goodwill should be eliminated. The freehold property are to be depreciated by 50%. The value of plant and machinery to be increased by 50,000. Here plant and machinery value has to be increased. The plant and machinery account data to reconstruction account. Give journal entries for the above and prepare the revised balance sheet. Come on. First of all, preference share capital old 100 rupees. So 20,000 shares, 2,000 shares were there. So 2,000 into 100, 2 lakh rupees, we are cancelling the old capital. To preference share capital new 75. So 2,000 into 75, 1 lakh 50,000. To reconstruction 50,000. Balance being the old preference share capital cancelled and new preference shares issued. Now equity share capital old 100 rupees. So earlier there was 4,000 equity shares of rupees 100 each, 4 lakh. We are cancelling the old equity share capital. New equity share capital 37.5. The face value has been reduced from 100 rupees to 37.5. So say 1 lakh 50,000. Reconstruction 2 lakh 50,000. Being the old equity share capital cancelled, new equity shares issued, the balance transferred to reconstruction. Now debenture holders. The debenture holders have accepted the stock and debtors in full satisfaction of their claims. So actually debentures are 1 lakh rupees given on the liability side. We are debiting, so it is closed. Now we are handing over two assets, stock and debtors. The stock balance sheet value 50,000, debtors 40,000. So 1 lakh rupees debenture holders, they are accepting only 90,000. So remaining 10,000 we are transferring it to a reconstruction account. Being the account of debenture holders settled by offering stock and debtors. Plant and machinery account data to reconstruction. The value of plant and machinery has been increased, appreciated. Then reconstruction account data 3,60,000. Now you can see reconstruction account 50,000, 2,50,000. So 3 lakh. 3 lakh plus 10,000, 310. 310 plus 50, 3,60,000. Now we are having a total of 3,60,000 in reconstruction account. So reconstruction account debit. To goodwill 15,000. We are writing off goodwill. It is given in the problem. To profit and loss account fictitious asset, write off. Then freehold property will be written off by 1 lakh. 1 lakh. So total it will be 3,60,000. Being the goodwill and P&L account written off and freehold property written on according to reconstruction scheme. So these are the entries. Now we have to prepare a revised balance sheet after capital reduction. Shareholders fund share capital number 1, reserves and surplus number 2, non-current liability not there, current liability trade payables, short-term loans total. Then assets were tangible assets, intangible assets, no current assets are there. Now we'll take the note number 1, share capital. Share capital 2,000 preference shares of rupees 75 each, new share. New share, the face value will be 75, 1,50,000. 4,000 equity share of 37.5 each, 1,50,000. So total share capital will be 3 lakh rupees. Here we have represented. Reserves and surplus are not there. Non-current liability debentures were there earlier. Now after capital reduction there are no debentures. Account is settled. closed. Now, trade payable and short-term loans, no change have been made. Whatever was there earlier, the same I have taken here. 4,50,000 liability side. Asset side, fixed asset, tangible, 5. Note number 5. Freehold property, 1 lakh. Plant and machinery, 3,50,000. So total, freehold property was reduced by 1 lakh. Earlier it was 2 lakh. Now 1 lakh rupees we have reduced, 50%. So remaining 50%. Plant and machinery we have not changed, same value. So 4,50,000 is the tangible asset. No intangible asset is there. Then current assets are not given. So 4,50,000. Balance sheet tallied. This is problem number 9. Now we'll come to problem number 10. The following is the balance sheet of C Limited as on 31st March 2009. Share capital authorized. Preference shares of rupees 10 each 5 lakh. Equity share of 10 each 5 lakh. This is authorized. Now issued and paid up capital. Preference shares of 10 each 2,50,000. That means 25,000 preference shares of 10 rupees each was subscribed. And equity shares, 25,000 equity share of 10 each subscribed. Current liabilities, sundry creditors, bank overdraft. Assets में goodwill, intangible asset. Leasehold premises, plant and machinery, tangible assets. Patents, intangible asset. Stock, debtors, cash, current asset. Preliminary expenses and profit and loss account, fictitious asset. तो 2 fictitious asset निकालने के हैं, preliminary expenses, profit and loss account. और 2 intangible asset है, goodwill and patent. Now, the following proved unsuccessful. The company proved unsuccessful, and the resolution was passed to carry out the following scheme of reconstruction by reduction of capital. The value of preference shares be reduced to 5 rupees. Presently, the face value of preference share 10 rupees. We have to reduce it to 5 rupees. The value of equity share be reduced to 2 rupee 50 paisa. So presently 10 rupees is the face value of equity share. New equity share 2.5. The amount so available be utilized towards wiping out losses and reduction of assets as follows. Now the amount released from this equity share capital, preference share capital will be utilized in wiping off the assets as follows. Write off preliminary P&L account, preliminary expenses account and goodwill account. ये 3 अकाउंट को राइट ऑफ कर देंगे, कंप्लीटली निकाल देंगे. किसको? P&L अकाउंट को, preliminary expenses को और goodwill को. Leasehold property to be written off by rupees 27,000. So leasehold property should be written off by 27,000. And stock by 14,000. Reduce stock by 14,000. And debtors by 6,000. Deduct 6,000 from debtors. Plant and machinery to be written off by 20%. And patents should be written off by rupees 1,08,500. And make journal entries in the books of the company and prepare the balance sheet after giving effect to the above scheme. Now, journal entries. Preference share capital old 2,50,000. 25,000 shares of rupees 10 each. Closed. New preference share capital. 2 preference share capital new. 5 rupees each. 1,25,000. तो पहले का जो शेयर 10 रुपए का था उसको नया शेयर 5 रुपए का इश्यू करें. तो 1,25,000 ट्रांसफर टू रिकंस्ट्रक्शन. Being the old preference share capital cancelled and new preference share issued as per reconstruction scheme. Next, equity share capital old account debtor 2,50,000. 25,000 shares of rupees 10 each cancelled. New preference share, new equity share 2.5. So 25,000 into 2.5, 62,500. The balance 1,87,500 transfer to reconstruction. Being the old equity capital cancelled, new equity shares issued 2 rupee 50 paisa each. The balance transferred to reconstruction. Now reconstruction account. ये 1,25,000 plus 1,87,500. So we have 3,12,500 available amount for writing off the assets. Goodwill को write off कर देने के लिए कहा. Balance sheet में goodwill था, write off कर लिए. Preliminary expenses 2,000 written off. P&L account 1,23,000 written off. Now it is specifically given that leasehold property should be written off by 27,000. Leasehold 27,000. Stock should be written off by 14,000. Debtors should be written off by 6,000. Plant and machinery to be written off by 20% of the book value. The book value is 60,000. 60,000 got 20%, 12,000. And patents should be written off by 1,08,500 given in the problem. Now if you add up all these amounts, you will get 3,12,500. Being the goodwill written off and fictitious assets written off and other assets written down as per reconstruction scheme. Now we have to represent in the balance sheet. Equity and liabilities, shareholders fund, share capital number 1. Then share B, reserves and surplus. Current liability में trade payable, short term loans. Assets, fixed assets, tangible, intangible, current asset, inventory, trade receivable, cash and cash equivalent. Now we'll take one by one note. The first note is share capital. 25,000 preference share of rupees 5 each. New preference share 5 रुपए का है. The amount is 1,25,000. Similarly, 25,000 equity share of rupees 2.50 each. So 25,000 into 2.5, 62,500. So total share capital 1,87,500. Over. Now reserves and surplus we don't have. So second point, reserves and surplus nil. Third, trade payable 40,000. No change we have made in trade payable creditors. Trade payable creditors. I have not written here. Third note. So you have to write note number 3. Trade payable creditors 40,000. No change. Note number 4. Short term loans. Bank overdraft. No change. तो capital reduction से पहले जो था अभी भी वही है 36,000. Take the total of the liability side 2,63,500. Now come to asset side. Tangible fifth. Leasehold premises 1,07,000 was the balance sheet value before capital reduction. How much leasehold property was written off? 27,000 was written off. So minus 27,000 कर देंगे 80,000 rupees are the leasehold property. Plant and machinery, its value was 60,000 in the balance sheet before capital reduction. 20% we have written off. 12,000 we have written off. 48,000. So 80 plus 48, 1,28,000 is a tangible asset. Intangible asset, दो थे goodwill. We have written off completely goodwill. Patent right. Patent right was given in the problem as 1,73,900 in the balance sheet. So out of this 1,73,900, 1,08,500 we have written off. Write off कर दिए. तो बचा हुआ 65,400. तो patents intangible asset 65,400. Inventories, stock. Stock before capital reduction 34,000. We have written off 14,000. So 34 minus 14, 20,000. Trade receivable, debtors. So before capital reduction, trade receivable were 56,000. And how much was written off? 6,000. So now 50,000. Last one, cash and cash equivalent, no change. पहले भी 900 rupees था, अभी भी 100 rupees. So total of the balance sheet 2,63,500. So this is the end of problem number 10.